Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, Robert van Eyden. He is the CEO of F&B Stockbroking and Portfolio Management. Robert, such an honor and privilege to have you on the show.
Thank you very much, Rocco. Good to be on the show.
Robert, let's get straight into it. There is a whole new generation that only knows high-frequency trading. How has trading evolved over the years?
Yeah, my journey, Rocco, started when I was about 18, 19. And
which year was this?
Oh gosh, no, you're gonna age me. It was 1985. So 1985 in the 80s, they always talk about the wonderful 80s, the best music, the best movies.
Yeah, I was born 84. So
there you go, another product of the 80s. So in the 80s, there were two good movies. There's a follow-up this year, and Top Gun came out mid-80s, and then there was The Wolf, not The Wolf of Wall Street, Wall Street by Michael Douglas.
Yeah.
And that created a lot of euphoria in terms of the stock market. And I got involved. I went to university as a student, initially to become an accountant, and I studied there. But there was this yearning for the stock market, and I actually picked up, studying accountancy and the stock market are not very related. And I actually changed direction into business economics, and business economics had a component of financial management and investment management.
Yeah. So
that's where the journey started. In my third year, I was exposed to investment management. And it was quite sad because the bulk of the work was on fundamental research. So it was unpacking, dividend cash flow models. It was spending a lot of time. Is the market efficient or not?
Yeah.
Remember, we always forget, but the financial markets and the analysis of financial markets is probably about 70 years old. It's actually still quite new.
Yeah.
Given everything we know about the world, it's actually very, very new. So when I started studying, a lot of these theories started filtering through. We saw about efficient frontiers. We saw if the market is random or not.
Now basically, it's just, is the meme good or not?
Yeah, absolutely. That's changed. No one cares about...
You're talking about efficient markets, but I mean, that's not really something, that's not memeable, Robert. I mean, let's be quite honest.
No, it's not. So that's quite interesting. So it changed. It changed quite a lot. And then, so a lot of the work was done on Benjamin Graham's value investing, and then Markowitz and Farmer, French and Farmer created these things with efficient frontiers and the virtues of diversification.
Yeah.
And we saw, so I spent a lot of time on fundamental research. And then I remember in my textbook, there was about a chapter. It had about 10 pages called technical analysis.
Ooh, taboo. Very. Right for the 80s. Yeah, what's this thing called technical analysis?
What's this technical analysis? It's taboo and it's terrible.
Devil's literature.
Yeah, but I thought this was quite cool because, I didn't have to spend a lot of time analyzing an income statement and a balance sheet, which was anyway back then, if you got the information, it was very stale.
Yeah. So very old, obviously, right?
Yeah, very old, very, the information was not instantaneously available.
I think it's something we're taking for granted these days, is that the data and the information is there. It's not, it's like literally at a tick and it's there.
No, absolutely. So it wasn't there because I'll share how backwards it was at one stage, because at one stage I subscribed to, let's call it a charting service. And then once a week they posted me charts. So, so I got these charts in the post with a couple of, someone was drawing it by hand and then plotting a moving average, and you could look at these charts. And the same thing, one of the first educators in South Africa was Progressive Systems. And it was the same thing. They used to, it got a bit better in the mid-80s because we were exposed to the fax machine. So to distribute charts was a bit more easier. It was a bit more quicker, post, but, fax machines were quite expensive and not everyone had a fax machine. So I started off with these charts, and then there were a couple of books. So the grandfather book of technical analysis was written by Edwards and McGee. It's a 700-page book. That's massive.
Jeez.
So I started with this one, and then eventually another pioneer in technical analysis was a guy by the name of John Murphy.
Yeah.
And I started his books, and eventually I got into this technical analysis. Computing power started improving quite a lot. In the 80s, we got things called modems, and lo and behold, you could actually connect your modem to someone else, and you could download share prices every evening.
Amazing.
It took a while, and then there were a couple of packages, and there were a couple of South African that really did exceptionally well in terms of developing packages. There was the Indexia package, and he's moved across to the UK, and then Gary Stone, who runs a system out of Australia, they created packages. So I had my packages. So I was very happy, and I got very excited about this technical analysis. The problem was, and this is a problem I had for many, many years, I wasn't making money.
Yeah.
But just going back to my journey of technical analysis, so I finished studying, and eventually I got an offer to teach at the university. I ended up teaching at the university for about 6 years. So the one thing I did achieve was to create a bit more excitement about technical analysis.
Oh, so you were the hype before the hype actually came, basically.
Yeah, at the university. So those 10 pages, so I could make it alive. I could actually show people charts. How this is how the top 40 wasn't around. It was basically the all share index. This is how the all share index looked. And when there were, when things were happening, I could show to students. So there was a lot of excitement. So much so that I organized, there was a package back then called iNet. I got it for the university, and students could actually play around. So a lot of students got super excited about technical analysis. Then word got around. I was still teaching at the university. Word got around at the stockbroking firms. They wanted a course on technical analysis, so which I obliged. And on Saturday mornings, I presented a technical analysis course, very much on the John Murphy. It's patterns, trend lines, all of that good stuff. Okay,
and through which medium? What did you use?
So it was in a computer lab at the university.
Wow.
So people could go to the computer lab. We downloaded everything on the computer lab. So how a lesson was structured, it was about 40 minutes teaching the principle, and then we had about 30 minutes, students could actually play around. So if it was, for example, on moving averages, we went through the different moving averages.
That's amazing.
But I was still losing money, and this will be a common theme in but I love technical analysis. I love charts and technical analysis. So eventually, I get a position at a stockbroker, and whilst at university, the only way to get promoted at a university is to do your PhD. So I did my PhD, and this surprises a lot of people. So I completed my PhD in 1994, and I did it on neural networks. Yeah. Because people think, neural networks is like, been around for the last couple of years. They've been around for many years. And I got a bursary to study in the US, and I studied under a professor. And effectively, I did my PhD on the forecasting of shares using neural networks. So this was like groundbreaking work. Now we're getting machines. The word machine learning didn't exist back then, but, it was machine learning. And then on completion, I get these offers from stockbrokers because they're very keen on this, because anyway, to make money in an easy way is the way to go.
Yeah, especially with those buzzwords.
Yeah, so that kind of ended my academic career, and I moved into the financial markets where I've been ever since. I started as an analyst, a head of research, and then for the last 10 years, I've been managing various stockbroking firms.
Yeah.
All, let's say for the last 10 years, it's been going well, but prior to that, I love technical analysis, but I was constantly losing money.
So something that you're basically very passionate about is education, right? So there are a lot of new market entrants coming almost every day. I mean, the access to financial markets has never been easier. They are all largely turning to services like TikTok and Reddit and Discord and YouTube. What are some of the challenges that we are facing with trading education in this new environment?
So let's start with a problem. The problem is trading is the easiest, hardest thing you can do.
Yeah.
And therefore, you get a lot of people entering in this market, providing education. I think the education has shifted from, let's say, in my days when initially it was paper-based. You got your lessons posted once every month. Then it got more advanced, and then it got computer-based, and we even saw it on discs and etc.
Yeah.
The challenge with the education is basically what is the intention of the education. So I think a lot of people have cottoned on about this easy, hard thing about trading.
Yeah.
And then there's always this demand, because it's in our innate human nature that we want it easy. And if we can get it easy and we can, get an excessive return for little effort, that's exactly what we like to do.
Yeah.
So there's a market out there. There's a term, a very old term about snake oil salesman.
Yeah.
Which was a American term, and there's a lot of that snake oil education out there. I think generally, if you know what you're looking for, which is the problem, because you don't know what you don't know when you start this journey, you could probably get everything you want. So the challenge for me is basically, I see a lot of these people advertising courses, and some are quite expensive.
Yeah.
Most traders do not survive. I've seen it in terms of the businesses I've managed. I've seen it in terms of clients I've managed as well through the process. There's the 90-90-90 rule, the 3 90s, which means basically 90% of traders will lose 90% of their money in 90 days.
That's a good one to remember.
So it's basically, it's a huge concern. So people are alert to the lure of making quick money. They are alert to the idea of the marketing sizzle.
Yes.
Sitting on the island, driving the Lamborghini, whatever.
Yeah.
And
Instagram culture, right?
Yeah, and they don't understand there's just a lot more to it. So you can be lucky once, you can be lucky 3 times, you can be lucky 4 times.
Yeah.
The problem is with luck, eventually you become overconfident and then you blow up. So for me, in terms of the education, so about 10 years ago, the penny dropped in terms of where I was going all wrong, because I was focusing on win rate. Because we are taught, we are taught 100% is what you need to be achieved. We are programmed at school, 90% is better than 80%, etc.
Win at all costs.
Yeah. And then also the thing that happened in the 80s is the need for now, if I can put it like that, instantaneous gratification, etc. So you've got these two factors going. So when I talk to people, the first question they would always ask me about a system is the win rate. And it's one of the components of a system. The other component is obviously your risk to return, which is a function of position sizing, stop loss management, etc. And that's probably the most important. If you combine the win rate with your return and risk, you get something called an edge. and you need an edge that needs to be positive. So, and you need to play this edge over and over and over. And if you compare it to, casinos, most casinos only have an edge of about 5%, which is quite small.
Yeah.
But they know they've got clients coming in, playing over and over and over, and eventually they will win. And it's the same with trading as well. And this doesn't come through in terms of, a lot of the education. A lot of the education is either focused on this win rate.
Yes.
This is the secret indicator or the secret method. And the problem with a lot of this is basically the method might not work for you because your risk profile is very different, your composure is very different, and your tolerance to markets is very different. And we sort of, you see it quite a lot now in let's call it the digital assets, the cryptos.
Yes.
You see prior to crypto, it was FX, the dream, leverage yourself to the moon and back. And then you trade away and you too could be sitting on an island, which is unfortunate because I believe, you do not need a high win rate. Any method could probably work. You need from about 40% and a risk to return of about 2 to 1, and off you go. But you just need to repeat the cycle. And it's very similar to, if we look at the other school of fundamental research, this is exactly what Warren Buffett has done as well. He has just compounded over time. And it's the same thing about trading. If you compound your edge over time, you will succeed. But why not? So greed comes in because I'm spectacularly a genius at what I'm doing.
Yeah. God complex.
I've had 4 winning trades. You know what?
I've got this thing figured out. I'm its boss. I know everything. And also it's the people don't realize, but it's percentages, right? It's not percentages, probabilities. And people want 100% probability win rate, and there is no such thing. So they focus too much on that.
No, and you remind me, the only statistic that has got 100% probability, and it's hard to say, is death.
Yeah, well, and taxes, I guess.
And taxes, but we are 100% guaranteed we will die. And for the rest, there's no probability anywhere. And at the end of the day, it is managing probability because, so when the penny dropped in my life about 10 years ago, moving away from win rate, because, I tried everything. I tried fundamental research, I tried technical analysis, I went into neural networks, and nothing worked. Yeah. And then something focusing on combining win rate with the reward and risk, things changed for me. And just playing the edge, not doubting your edge, because if you do have an edge, don't doubt it, because there will times you will have
obviously
losing trades. My record is 9 in a row. How do you deal with that? Well, quite easy, because I don't risk a hell of a lot. So I know if I risk 2%, maybe 9, I might be down 18%. I might be down, but I'm still in the game to play the game in the future. So I think where education, if I look at the education, it's all out there. There's some really good people out there that actually don't charge anything. I think there's a guy called Adam Koo out there, excellent, very good stuff. A guy called Reno as well, very good stuff as well. But the challenge still remains, if I am new, it's very difficult to go on a person's YouTube channel and you're seeing all of these loosely but interconnected things. So
but I think that's a very good point that you brought about the edge, and also like focus on delayed gratification. It's not a sprint, just it's basically an adventure, right, or a career that you take over months and months. It's not a sprint to the finish.
Yeah, absolutely. So I think, if, where I'm sitting now, if I knew these things in, my late 20s when I got involved, I probably would have been sitting on an island today, sipping coladas.
The benefit of hindsight, right?
No, absolutely. But, I think the lessons I have learned, I try and share with people. So I've been running, I think I calculated the other day, it's close to about 2.5 years. I've been posting a principle every month. every week
on LinkedIn, right?
And his principles are basically about what does it take to succeed in terms of trading. And I also debunk ideas, for example, like win rate. I debunk ideas in terms of, you know, that you'll always win on whatever market you're playing. So ultimately, so my shift is maybe I've not been rewarded financially, but I have been rewarded intellectually and the knowledge I've started sharing. So in the last couple of years, I've written 2 books that have been published on Amazon. The first 2 books are predominantly about, you know, investing in an ETF and forget about it. So and then every month you just put money into an ETF and forget about it.
Dollar cost averaging, right?
Yeah, all of that. And then I followed up, the book's name was The Money Fountain. And then I followed up by another book called Investing Happiness, because I discovered that people don't believe this. It's too easy.
Yeah.
Putting money in an ETF, you know, and I was looking at it like, well, if you just put into S&P 500, you would have been averaging about 15% returns for the last couple of years.
Yeah.
Which is exceptional. And you can imagine, you know, there's a rule called the rule of 72, which gives you a quick idea in terms of how quickly your money doubles up. So if you take 15%, you say 7 divided by 15, let's make it around 2. So every third year, you double up your money.
Yeah.
Yeah, so the rule of 72 as well. And if you think about it, then, so I got a lot of questions. So love the book, love the idea, but I'm not doing it. Then the question is, why not?
Too easy.
Okay, it's too easy. I don't have time. I'm like, you don't have time. You know,
it doesn't take time. I mean, really.
Yeah, at the end of the month, you just have to buy one thing, and you kind of price agnostic because, you know,
you don't care.
So I wrote Investing Happiness, which was more on the psychology, why people don't do it, and it's all these bias. You know.
Robert, before I let you go, what is your favorite principle? If you have to pick one to share with the listeners.
My favorite principle is basically that trading is a game of probabilities.
I like that one.
And you need to manage the probability. And you know, when it comes to probabilities, I always tell people when they start the trading journey, the one thing you will never know once you've placed a trade is the outcome of the trade, because it's a probable outcome. And the other thing I tell people, whatever happened to your previous trade is not an indicative of what's going to happen to the next trade, because your outcomes are totally independent of each other. So if people start understanding this is a probabilities game and they need to manage probabilities, and it's a long-term game. It's not about the next trade. It's probably about the next 100 trades, next 1,000 trades. You will succeed. And all this glamour, which is all the sizzle rather, what did I say? Market and sell the sizzle and then buy the steak. In trading, it's the other way around. You need to spend a lot of time on process and managing probability, and then you'll succeed over the long time. But it's a hard slog, because this is all counterintuitive to how we're thinking, because people like certainty, and the stock market is probably the place that is most uncertain.
Yeah.
So
that's excellent advice, Robert. For the people that want to connect with you, and we'll leave the links to your books in the comments, where can they connect with you? What's the best place to do that?
Rocco, I think the best one at the moment is on my LinkedIn profile. So that works well. I do not have a web page or anything. I've been thinking about it. I've got another book in my mind. I've got 2 books in my mind. So the one is basically to consolidate a couple of these principles. And I monitor, so I'll probably, it's an easy one for me. So the ones with the most likes will be the ones that
and you might have to release it as an NFT, right? Because that's where we're going.
And then I've been writing a couple of articles for magazines. So I've written 2. I'm busy with my 3rd one at the moment. So I'm trying to basically, if I can consolidate the articles, and put it into a book as well.
Yeah.
The challenge with the book, I think going forward with books, they've been self-published, but it takes a lot of effort. So I need to find a quicker way of not spending my days with Kindle Create Space and things like that. But yeah, so that's the journey. But to your question, LinkedIn is at the moment, I do not have any wonderful websites or things like that.
And we'll put everything in the comments. Robert, thank you so much for joining us. To our listeners, peace, love, and prosperity. I will catch you in the next one. Cheers.